Up to now we have discussed about the different kind of non-banking financial companies. We discussed about the how the non-banking financial companies or NBFCs are contributing the economic growth process and how they are different than the commercial banks and the other financial intermediaries which are existing in the system. Then there are some specific financial organizations we discussed about venture capitals, merchant banks, credit rating agencies, etc. And in the Indian financial system, we have one specific group of the financial organization, what we call them the non-bank statutory financial organization, and those organizations exist there to provide certain kind of specialized services for some specific regions. So, these are the statutory body which provide the kind of services to for a particular cause. It is not for a common cause, they provide the benefits, they provide the services for a particular cause, and those kind of organizations are many. There are many organizations which exist, but we will be discussing certain specific organizations which are really contributing to the development of the financial system and overall as well as the overall economic growth of the particular country. So, let us see that what do we mean by this non-banking statutory financial organization. So, that whenever we talk about the statutory financial organizations, they are mostly always recognized, historically they are always mostly recognized as the development banks or the term lending institutions or specialized or development financial institutions or the organizations. They are not the financial intermediaries, because they generally do not mobilize the savings from the ultimate surplus spending units and instead obtain the resources primarily from the government and the RBI. But now some of them have started mobilizing the public savings directly or indirectly, but mostly the basic objective of this thing is not to mobilize the savings. The establishment of the statutory financial organizations are not to mobilize the savings, they are basically to provide the assistance for betterment of a particular unit or particular sector. So, mostly they have been made by or set up by the government, but there are some private participation also we can always see whenever we talk about the NBSFOs or non-bank statutory financial organizations. So, these are, that means the overall the this non-bank statutory financial organizations are existing to provide certain specialized benefits to particular sectors or for some specific regions. Then what are those major NBFCs which are operating in India? If you see the major NBFCs which are operating in India, they are categorized into two parts. There are four prominent institutions or organizations which are registered with RBI or controlled by RBI, and they are contributing a lot, what we call them the All India Financial Institutions, AIFIs. And there are many other NBSFOs, non-banking statutory financial organizations. There are many, but here we are going to discuss some specific NBSFOs like IFCI, IRBI, ILS and FS, SFCs, State Finance Corporations, Warehousing Corporations, Tourism Finance Corporations of India. You might have heard about all these things, but there are other many kind of NBFCs, NBSFOs which work in the Indian financial system. There are prominent which are what we call it the All India Financial Institutions, which are directly controlled by the Reserve Bank of India, and Reserve Bank of India has strong role for the development of this All India Financial Institutions which exist in the Indian financial system. Then you see one by one, if you see, one is your Exim Bank, you might have heard about this, that is Export Import Bank. It is a fully owned Government of India bank, which was set up in January 1st, 1982. And what was the objective of having this? The objective of having this Exim Bank is for financing facilitating and promoting the foreign trade. To increase the foreign trade, to provide certain benefits for the export and import business, they have established, or this particular bank was set up in 1982 by the Government of India. Currently, this board has 12 members or 12 directors, which are appointed by the Government of India, including the chairman and managing director, which also include the 5 nominees from the which are from the Government of India functionaries, 3 directors from the scheduled commercial banks, and 4 industry or the trade exports. So, this is the way basically the board always has the this is the way the board looks for the Exim Bank. And mostly the Exim Bank, where the Exim Bank gets the money, because they are not raising the money from the public. It is not like a commercial bank who takes the deposits and gives the loan. And already I told you that all kind of all India financial institutions are contributing in terms of the development of a particular sector. So, here the Exim Bank is contributing in terms of development of the trade. So, because of that the major sources of fund what they get it in terms of equity, in terms of the loans from RBI and the bonds, and also they raise the money from the government. Bond they can issue in the domestic and foreign capital markets, and also sometimes they get the loan from the international financial institutions like IMF, World Bank, etc., Asian Development Bank and on. So, these are basically the major funding agencies to Exim Bank, and Exim Bank gets the money from them and try to utilize that money for the development of the trade in the system. So, that is what always the basic job of the Exim Bank or basic role of the Exim Bank in the financial system. What kind of jobs and what kind of functions the Exim Bank do? What kind of services we can always get from the Exim Bank? If you see, already we have discussed that the existence or the setup of the Exim Bank is to promote the trade, to develop the trade sector. So, then how basically they do that? So, if you see, they provide the post shipment term finance means long term finance, they provide for the post and pre shipment or the pre shipment credit they also they provide. They give the loan for the export oriented units, anybody who are trying to do the export business, the Exim Bank can give them the loans to start the business or do the business. They also provide the finance for the overseas investment. They also finance for the export marketing. Then re-lending facility to banks abroad. Export, they also rediscount the export bills, refinance the export credit, and sometimes also they provide a bulk amount of finance for the import. They provide the loan or the finance for the import, and also apart from this they also provide the research, analysis, advisory and information services to the different kind of units or different kind of customers on the basis of their requirements. So, mostly they provide the term lending, it is a term lending institutions or the lending institutions who provides the financing, provide the necessary finance for the development of the trade in the economy. Then we have another all India financial institutions we have. Always we are very much aware about this word, that is called NABARD, National Bank for Agricultural and Rural Development, which is a popular name. This was also set up in 1982, July 12, under the Act of Parliament as a central or apex institution for financing the agricultural and rural sectors. This particular organization was set up for the development of agricultural and rural sectors, with a special focus on the agricultural sectors or the rural sectors. And again there was amendment in 2001, that NABARD Act, which basically classify it as a development bank and permitted it to enhance its capital subject to the minimum holding of 51% of the Government of India and the Reserve Bank of India. because it was set up by government, then the more than 50% of the share the government always enjoys with a NABARD, and mostly this particular holding is either directly from the government or the Reserve Bank of India. And what the NABARDs do? What the NABARD basically do? If you see the functions, whenever we ask these questions, what NABARD does and what kind of functions the NABARD has, then we always from the beginning overall what we have seen NABARD provides the finance or do something for the betterment of the agricultural and rural sector. So, it is a coordinating agency in respect of agriculture and rural development activities, which coordinate between central and state governments and the other institutions in terms of investment and the financing activities. It also is responsible, always undertakes the inspection of the cooperative banks and the regional rural banks without the prejudice to the powers of RBI. Although RBI is the apex body, but still they always look at whether the cooperative bank, because sometimes also they finance to the cooperative banks and the regional rural banks. So, because of that it is also the responsibility of the NABARD to see whether this particular cooperative banks and regional rural banks are performing better or not. It provides credit for the development of agriculture, small scale industries, cottage and village industries, handicrafts and other rural crafts and allied economic activities in the rural areas. Any kind of small activities, whether it is agriculture, whether it is small scale industry, whether it is handicraft or any other thing which are basically happening in the rural sector, or there is some employment generation can be created, some income can be generated through that particular kind of industry, particular kind of business. NABARD is always responsible to provide the finance for that. NABARD, there is a provision to finance those kind of activities by NABARD. It also provides the short term finance, refinance assistance for a period of 18 months to the state cooperative banks, commercial banks and regional rural banks for a wide range of activities in the areas of production, trading, marketing and storage. Trading, marketing, storage also, if it is done by any kind of cooperative banks and regional rural banks or anybody wants a loan for this kind of activities. So, that particular point of time also NABARD helps them providing this necessary finance for this kind of services. It also provides the long term loans up to 25 years maturity to different kind of cooperative banks, state cooperative banks, SCBs, regional rural banks, RRBs, then state lending development banks. These are basically the different kind of commercial banks also, and some other approved institutions for the purpose of making investment loans. It also gives loan to state governments up to 20 years maturity to enable them to subscribe to the share capital of cooperative credit societies, to take the ownership of the state cooperative credit societies. It can also provide the loan to the state governments whose maturity period is up to 20 years. So, that means overall it tries to finance those activities which are related to agriculture or any kind of activities related to rural development. So, in that context, if you see NABARD's specific role is for the development of the rural sector and the agriculture in the economic system. Then also they refinance for major irrigation, they provide also financing for irrigation, plantation, horticulture, land development, farm mechanization, animal husbandry, fisheries, for all kind of activities, because all the activities are also linked to agriculture and the we can say that development with respect to rural sector. So, they also refinance to these activities. They also finance for the seasonal agricultural operations, marketing of the crops, purchase, procurement, distribution of agricultural inputs, all these things. Medium term loan facilities for the approved agricultural purpose, and also working capital refinance for the handloom weavers. They also one thing here you remember that this is basically marketing marketing of crops, purchase and procurement, distribution of agricultural inputs. They also provide the working capital for the working capital handloom weavers, and refinance for the financing government sponsored programs such as IRDP, Rozgar Yojana, all these things. They provide also finance for this kind of thing. So, these are the major functions, major job of NABARD, and overall already I told you that the basic, if you see all these functions, mostly they provide the finance for the development of the agriculture and all those issues related to agriculture and the rural sector development. Where the NABARD gets the money to provide this kind of finance? NABARD gets the money from RBI, major loans from the central government, World Bank they can get, then they can get some money from the other international agencies, Asian Development Bank, or they can also sell the bonds and debentures, direct borrowings they can do like that. So, this is the way mostly they get the funding from the RBI and the central government, and also in certain cases they try to raise the money from the different funding agencies which are globally available like World Bank and other kind of organizations. It has been associated with the implementation of a number of projects with financial assistance from the World Bank and International Fund of Agricultural Development. Number of projects NABARD does on behalf of them in the country for the development of the agriculture or betterment of the agriculture and as well as the betterment of the rural sector development. So, that is what the basic way of raising the money by NABARD from the different sources. Then we have another organization which are also All India Financial, which is also All India Financial Institutions, that is NHB. It was established in 1988 for the housing finance, and it is a fully owned, wholly owned subsidiary of the Reserve Bank of India. So, the basic motto or basic objective of having this NHB was to finance this housing loans, housing activities, and the explicit and primary aim of the NHB is to promote housing finance institutions at local and regional levels in the private and joint sectors by providing financial and other support to such institutions. It also refinances housing loans under its refinance schemes for scheduled banks and the cooperative banks, housing finance companies and cooperative housing finance societies. So, that also refinance the housing loans to different other entities which exist in this particular system. So, therefore, in overall this particular organization always ready or always the basic job of this particular organization is to provide this finance for the development of the housing in the economy. So, that is called the NHB, and we have another organization we have, that is a SIDBI, which is very popular name, and the basic job of the SIDBI was to develop the micro, small and medium enterprises in the economy. So, this was set up in 2nd April 1990 under the Act of Indian Parliament, and it acts as the principal financial institution for promotion, financing and development of the micro, small and medium enterprises, as well as for coordination of functions of institutions engaged in similar activities. Any kind of organization which are linked to this kind of small or medium or micro enterprises, for all those kind of thing the SIDBI is ready to finance them. So, the basic job of the SIDBI is to promote the or the develop this particular MSME sector and MSME companies which can largely contribute to the development of the rural sector and as well as the economic growth as a whole. So, that is why the contribution or the significance of the SEBI in the Indian financial system is quite large or quite robust, and therefore, always we should look at that what is the functions of SIDBI is doing. The function of the SIDBI is basically the development of the small sectors in the economic system. So, that is why keeping those things in the mind, what if you see formally what are those objectives of SIDBI. The objective of SIDBI is to promote the marketing of the products of small scale sector, to upgrade the technology and also undertaking modernization of the small scale units. For everything they finance them, they might not have the technical knowledge, but the financing part, the basic part of the financing is always done through SIDBI. And they also provide the more financial assistance for the small scale ancillary and tiny sectors, very small sectors, and also they encourage the particular sector which is employment oriented, the primary sector particularly, whether it is small scale industries or handicrafts or it is any kind of thing, where relatively the employment opportunity is higher. The SIDBI is always trying to finance them. Even SIDBI is finance also the what we call them the microfinance companies. They also give the loan to the microfinance companies for providing the loan for the self help group and other bodies, that what we have already discussed. Then also it coordinate the basic another job of the SIDBI is to coordinate all the institutions involved in the promotion of small scale industries. It is not only finance, it also coordinate in the different activities what these other organizations are doing for the promotion or the development of the small scale industries in India. So, therefore, the importance of SEBI, because India is a rural based economy and the importance of the SIDBI is quite large, in the sense it creates a nexus between the financial sector and the real sector at a time. That is why the SIDBI's role is quite significant in this context. So, what are those functions they do? They refinance to the small scale industries, small scale sector in existing in the country, discount the bills for them. They sometimes also offer the assistance for the export in this particular sector. If any kind of product what the small scale industries are making and those products are quality is exportable, they are the exportable product, for them also SIDBI can offer them the assistance. They provide the seed capital and soft loan assistance to the different entities who always deal with this development of the agriculture and rural development. Apart from all kind of financing activities, they also do some non-financing activities, like they provide the service in terms of the factoring, in terms of the leasing and also the hire purchase finance. SIDBI also provide this kind of services that already we have discussed. That what do you mean by the leasing, what do you mean by the factoring, what do you mean by this hire purchase, that part already we have discussed, but those are the basically the financial services, and those services also are given by the SIDBI whenever somebody does the business in this rural or the agricultural sector. Then also they provide the assistance to other financial institutions if they can. If they have the surplus funds, they can always help to the other financial institutions. Automatic finance scheme and the venture capital. They also sometimes act as a venture capital through which they want to motivate, they want to sponsor certain kind of businesses in this sector which are really doing well or they are going to do well in the future, or there is a better scope for those kind of industry or those kind of projects for the for making this finance agricultural or rural sector more efficient, and as well as they can contribute more for the growth rate of this particular economy. So, these are the non-finance services what the SIDBI always provide, or this is the way the SIDBI basically functions. Then we have some other financial institutions that already told you. One of them is your Industrial Financial Corporation of India. So, what is this Industrial Financial Corporation of India? It was set up in 1948, very long very old organization if you think about Indian perspective, by the Government of India Act IFCI Act 1948. And what was the basic objective of this? The basic objective of this is to provide the medium and long term loans to the large industrial concerns in the private sector. The constitution of IFCI was changed in 1993 from a statutory corporation to a company under the Companies Act to ensure the greater flexibility. With effect from October 99, its name has been changed to IFCI Limited, and from August 2007 onwards, it being regulated as a non-banking financial company, and IFCI became a government controlled company subsequent to enhancement of equity shareholding up to 55.53% by the Government of India in December 21, 2012. So, this is the history about the development of IFCI, and here if you see what the primary business what the IFCI does, it provides the medium to long term financial assistance to the manufacturing, services and the infrastructural sectors. IFCI also diversified into different range of other business, like they provide broking service, venture capital service, advisory service, depository service, factoring service, all these things. Also, they provide the loan, both direct rupee and foreign currency loan for setting up the new industrial projects and for expansion, diversification, renovation and modernization of the existing units. It also underwrites and directly subscribes to industrial securities, provides financial guarantees. They also provide merchant banking services, lease financing services. Also, as a development financial institutions, a major portion of the financial assistance of IFCI was being made to greenfield projects in India and to the projects in underdeveloped states. Major funding where they get the resources of money what basically they will raise, that basically loans from RBI. They can also increase to equity capital, they can raise to equity earnings or the return earnings, repayment of the loans, issue of the bonds, loan from the government. Then you have the they can also get the line of credit from foreign lending agencies, also the commercial borrowings in international capital markets. So, there are many sources of financing of IFCI, and this is the way the IFCI works in the system. We have IRBI, which is called the Industrial Reconstruction Bank of India. It provides the financial assistance as well as to revive and the revitalize the sick industrial units in public and private sector. It was set off in 1971 with a share capital of 10 crore. It was converted into a statutory corporation called the Industrial Reconstruction Bank of India in March 1985 with an authorized capital of 200 crore rupees and paid up capital of the 50 crores. What the IRBI does? It provides financial assistance to the sick industrial units, provides managerial and technical assistance to the all those units who are not performing better. It also provides assistance to other financial institutions and government agencies for reviving the sick units. It provides the merchant banking services for the merger, reconstruction, etc. Consultancy services also it provides to the banks and the matter of the sick unit, and also they do the leasing business. So, almost all type of business the RBI does in the Indian financial system. Then we have another one IL&FS, which is which was in the news for some days. You might have heard all this thing about this. The IL&FS was set up in 88 jointly by the Central Bank of India, CBI, UTI, SDFC, International Finance Corporation, Orix Corporation from Japan, and Credit Commercial de France and State Bank of India. And what are those basic objectives? What are those kind of assistance they provide? They finance the large infrastructure projects like highways, bridges, power plants. They provide the equipments for the leasing for the infrastructural development, for pollution control, transportation and communication. They also provide investment banking services, including the promotion of the mutual funds and extension or the extension of the venture capital. They also act as a member of the stock exchanges with focus of the development of the secondary markets. So, many services is provided by IL&FS, which was established in 1988. Then we have state finance corporations. The main function of the state finance corporation is to provide long term finance to small and medium scale industries, which concerns the public or private limited companies, and with a maximum period of 20 years maturity. It also grants loan mostly to acquire these fixed assets like land, building, plant and machinery. They act as an agent of the central and state governments or some industrial financing institutions for loans to the small scale industries. So, this is the way the state finance corporation works. Then we have warehousing corporations. The warehousing corporations was very old, 1957. They provide the logistics support to the agricultural sector. The activities include food grain warehouses, industrial warehousing, custom bonded warehousing, container freight stations, inland clearance depots, cargo, air cargo complex and all these things. It also suffer the services in the area of clearing and forwarding, handling and transportation, procurement and distribution, infestation services, then fumigation services and auxiliary activities they provide. It also offers the consultancy services, training for the construction, warehousing, infrastructure to the different agencies. The consulting services is one of the services the warehousing corporations also always provide. Then Tourism Finance Corporation of India, this is another body, and it is a specialized financial institution for the growth of tourism infrastructure in the country, and which provide the dedicated line of credit for the tourism related projects in the country. So, this was there also other kind of services which are related to entertainment and tourism, all kind of services we can always find from the TFCI. So, for all those details, if you want to study, you can go through these references, and this is all about the non-banking financial companies or non-banking financial organizations which operates in India. Thank you.